Why you're overestimating your retirement income taxes. All right, I'm going to tell you right now, man. I started this whole channel. I took on a guy, a nice guy. I like him. He's local, and he was doing a video where he's showing people a net average tax burden of 25%, and they're only making $80,000 a year AGI, not even taxable income. I said, this is nuts, dude. Anyway, it was bad planning, bad advice. He's not a bad guy. Uh-oh, Pablo wants to join in. Hello, my name is Pablo. I live on the second floor. I love this guy. But I don't like your dogs. I'm going to a dog channel. No. Come one, come all. Anyways, but the issue is, I was like, the people he's talking about aren't in a 25% tax bracket. They're not. Their effective tax rate is probably 11. So let me show you what I'm talking about. We're going to go to, this is from the Tax Foundation. I love this stuff. I love the Tax Foundation. I love these charts. I can watch this and oh man, it's weird, man. My brain says, chart, it's chart. This is where I'm like, how dogs go squirrel. I'm like, chart. All right. So I want to show you something. Federal income tax payments by income percentile. Literally, you're on my lap, dog. You're literally right here. There's no reason to bark. You're on my lap. All right. Finney's got a toy and Papa's not happy. You're on my lap. No reason to bark. All right, so all taxpayers, average income tax rate, that would be your effective tax rate in the Right Capital software. Not your bracket, your effective tax rate. It's 13%. So you say, okay, I make $100,000. My effective tax rate or my average tax rate is 13%. I'm paying $13,000. That's just for the feds, by the way. All right, but that doesn't mean anything because the top 1% is paying basically twice of that. The bottom 50% are paying, 85% less than that, if that makes sense. So where I'm going with this is the average income tax rate, remember, it is skewed towards the outliers, and the outliers are the top 1%. All right, so if you're in the top 50%, your average rate is 14.6%. Isn't that interesting? So you're saying, well, Josh, I could be paying my average effective rate is the top 50%. No, because it's being skewed by these guys in the top 1, if that makes sense. The bottom 50%, their average is only 3.4%. Now, what does that mean exactly in terms of numbers? Well, let's look. You ready? This rate, I love this guy's spreadsheets, or this guy's right here, DQYDJ. This guy's freaking, whoever's running this is, man, I bless them, my son, because these guys are fantastic. Individual income percentiles for U.S. income distribution. This graph we developed for the average individual income. All right, the average. We compare single person earnings for 2019 and 2020. All right, single person. So remember, we're going to go back here. Bottom 50%. All right, bottom 50%, their average income tax is 3.4%. Bottom 50%. Let's make this bigger. That's as far as I can go. There we go. Bottom 50% in 2020 for a single person was $43,000. And I don't know if that's AGI or they just say individual income. So I'm not sure if that's, I don't know if that, I will say that's just gross income. Bottom 50% for a single person is $43,000. Bottom 75% is $75,000 for a single person. So we just simply double that for simplicity. And we say if you're married filing jointly, it's $86,000 is your bottom 50%. How many of y'all are making $86,000? Now again, this is gross income, I'm assuming. That's not even taxable income. All right, so if we say, okay, if I'm making $86,000, or you can even say $60,000, it does not matter. You can sit there and say, okay, $43,000 for Johnny, that's what he's making. I'm married, I'm making half of that. I'm making $21,000, so that's $65,000 is our bottom 50% of income. And again, that's gross income before you have standard deductions or if you do itemized deductions. So we look here, we say, okay, federal income tax payments, all right, so we are then paying on average 3.4% in federal income tax payments because that would be your taxable income. So we're saying, okay, if Mary and Johnny are making $65,000 a year and they're paying on average 3.4%. 3.4% on 65,000 a year. I don't have my trusted calculator, so I'll use my phone. 3.4%. Now this is going to get even better. All right? Drives me up the wall, man. 65,000 times 3.4%. That's $2,000 in income tax. 2,000. I can't afford it. 2,000, man. Crazy. And if you're married filing jointly and you're making, and that's again, you're making $85,000, you're still in the bottom 50% or close. You're paying, let's say, 5% effective tax rate. 5%. So we'll just say 5% on $80,000. I think I can do that. $4,000. $4,000 in taxes. And don't forget, the first 15% of Social Security is tax-free. Don't forget that. So there's a lot of, and then if you do your income correctly, some of that, if not all of your Social Security, will be tax-free. And again, a lot of states don't tax Social Security. All right, so let's go back to this. We're going to go back to the, this guy right here. All right, and then we say, if that's how much you're paying from a federal income tax perspective, and we're in the bottom 50%, what does the state do? And then we'll just go down here. I'll put links to all this right here. All right, so we're going to go to state individual income tax rate. So we're in Georgia. Oh, 5.75 on anything above $7,000, Josh. In Georgia, you don't pay any income tax if you're married, or if you're $65,000 and over 65, you pay no income tax, none. So there's no state of Georgia income tax at all. A lot of states don't tax Social Security. A lot of states don't tax pensions, and as such, even states like Maryland, for instance, the taxes. So you go to Maryland. Oh my goodness, I get a lot of complaints about Maryland. Let's go to Maryland right here. Oh my goodness, I have 4.75 over 3,000. Maybe not necessarily, because Maryland has a lot of favorable tax treatment for retirees. I'm just telling you, man. So you gotta, before you start fleeing these high tax states of like California, oh my goodness, I gotta pay 9.3 if I make over 58,000. Not necessarily. I deal with a lot of Californians, and very few are paying that much in income tax when they're retired, because California has a lot of retiree benefits that they don't have if you're a W-2 employee. No, you know why I have Pablo bark like that, right? To keep you awake. That way you're like, oh, I was falling asleep because Josh is so boring. But now with Pablo barking, I was right back awake. And here's Arkansas. Oh my goodness, I pay 5.9 if I make more than $8,000. Not necessarily. Not necessarily. So point being is a lot of these states are quite favorable from taxation when you're in retirement. So the idea that you're going to pay on average 25% tax is just stupid, man. Don't use that. Most likely you'll pay 5% effective tax rate to the feds, and you can even throw in 2% to the state. But most likely, many of you are going to pay less than 10% effective tax rate. Now, the big one is the property tax, which we'll get to here in just another video. Thanks now.